Supposedly, we found out today that sales of existing homes in the United States dropped in October. This was based on a report from the National Association of Realtors on what they call pending home sales. That's just the actual number of contracts that were entered during that month. It's good data because it's reasonably timely as opposed to the existing home sales, which is reported on the basis of closed sales from the month before, and that represents sales of one under contract generally a month or two before that. The existing home sales data is pretty stale data by the time it comes out. So the pending home sales data is good data. What's not good about it is that it's only reported on a seasonally adjusted basis, and that is a fake number that's made up to ideally represent what the trend looks like. And it sometimes is accurate. Most of the time it's accurate, but not always. Some months it's not completely accurate in terms of representing what's actually going on in the market. It's never the actual number. And what I like to do is draw the actual trend, the actual sales on a chart, going back over time, draw a few lines so that we can see where the trend is, and take it from there. The current report stated that sales were down 0.6% in October, and that is versus a 4.6% drop in September. However, in neither case was that exactly accurate. So what I want to do now is to show you the charts of the actual data and let you see for yourself how things are going.
This chart has a number of data series on it. On the top part of the chart are price indexes. The index that we're interested in, the pending home sales index, is down here at the bottom. Just briefly looking at a couple of these price indexes, this blue line here is from Redfin.com. They are an online real estate brokerage firm with offices in 19 markets around the country. They're some of the better markets around the U.S., although they have a nice geographical distribution. It gives you an idea of how the stronger markets are doing. One of the reasons I like their data is because it's near real-time data. They're actually reporting contract prices that they collect from the multiple listing service. So these are October contract prices here. The thin line is the October year-to-year trend. The little circles are the current October and each previous October. And you see the same thing on this graph, which is the total prices of listings nationally that I get from housingtracker.net or departmentofnumbers.com. This is absolutely real-time data through the current week of November. They collect the data from 55 of very large metropolitan markets, so it's a great representative sample. Now you might say that listings data does not give the accurate pricing information, and that's true in terms of the level, but I've been tracking this data for years and it is an accurate representation of the trend. It has been subsequently verified by the trailing pricing data that's released with a lag. So we have a pretty good idea that the listings price data does give us an accurate representation of the current trend, and it indicates that from November to November, the trend is still moving along the same line, that the closed sale prices shown by the realtors' median home sales, that's this green line here, October to October. The Federal Housing Finance Agency uses overly smoothed and lagged data. It's kind of worthless. It's even similar to the Case-Shiller index, which I pay no attention to because it's even more smoothed and lagged. It's worthless data. Case-Shiller, don't pay any attention to it. But you get an idea that the trend is fairly consistently rising in terms of prices, and we've reported on the tight inventories, and that situation is continuing. The inventory situation is not easing very much at all. So any slight increase in sales activity is going to continue to push prices higher. Let's focus on the chart that is of most interest today. That's the release of the pending home sales data, or current contracts, in October from the National Association of Realtors, and that is this bottom chart down here. Now I've converted the index to a scale that roughly corresponds with the existing home sales so that we can get an idea of the total number of sales each month and how it did versus the past. The orange line is the actual monthly number. Okay, and here's the current October. You can see the seasonal pattern going back to January of 2005. Nothing obscure about that. We got a little bit of a bump here in 2009 from the home buyer's tax credit. A lot of good that did. The market went back in the tank in 2010. Had it not been for that, we would have had a nice smooth bottom here in 2009, 2010. But yeah, the government just can't keep its hands out of meddling in markets and thinking it's going to make a difference. Never does, but they never stop thinking that it will. Anyway, here's the current month of October, and sales had a pretty nice jump from September. They weren't down 0.6%, they were up. Now, admittedly, October is usually an up month, so let's compare the current October to the last 7 or 8 Octobers. Last year, big jump. We weren't as big as last October 2012, but when we look at 2011, 2010, 2009, 2008, all the way back to 2005, this year was better than every single one of those years except for last year. So all in all, not a bad performance. Let's look at the overall level. We came down a little bit from October 2012 when there was some pretty strong activity, pretty strong recovery in sales. In October 2012, sales were the best since the top of the bubble in 2005. Okay? We came down a little bit from that. What happened in October? Well, from the 1st to the 16th, we had the government shutdown. That may have affected a few buyers directly, and it probably certainly had a psychological effect on the market, perhaps helping to depress sales a little bit. We won't know until next month, until we get the November data, exactly how much of an effect that had, but I'm sure it was something, and I wouldn't be surprised to see November get back to trend. Now, inventories remain tight. I'm not going to bore you with that chart. They're still very tight. That means that any minor uptick in sales is going to keep these price trends moving higher. Is it a bubble? I think so, but I'm not going to get into the reasons I'm thinking that now. Suffice it to say that this market is nowhere near as weak as the headline said. It's not weakening. It's not falling apart. It's still moving along the same trends, and it had a pretty good month in October.
If there's one thing we know, it's that the Fed's zero interest rate policy and QE are good at promoting asset bubbles, and they're especially good at promoting housing bubbles. And as I said, I think that's what this is. It'll go on for a long time, as long as the Fed continues these policies. I see no reason for prices in the U.S. housing market to stop rising or even slow down. The longer it goes on, the more dangerous it becomes. We know what the outcome will be eventually, but for the time being, it is what it is. Now, I track the actions of the Fed, its cohort foreign central banks, the U.S. Treasury, and all of the forces of macro liquidity that drive markets, not just the housing market, but the stock and bond markets in particular, as well as precious metals. I do my work in the Wall Street Examiner Professional Edition. If you are a professional investor or an experienced self-directed investor, I invite you to try the Wall Street Examiner Professional Edition risk-free for 30 days. I think it'll give you some insight into what's driving the market and enable you to act with greater confidence in your investment and trading decisions. You can try it again, risk-free for 30 days. Just look for the information at wallstreetexaminer.com. Thanks for joining me. See you next time.